Welcome back, traders and investors, to Benzinga's PreMarket Prep. We are on the line with Evan Schnidman of Prattle Analytics. Evan, how you doing this morning?
I'm great. How are you guys doing?
Good. So I do know that Prattle is a analytics company. Can you kind of tell us a little bit what they do, what you guys track?
Yeah, absolutely. So we are a text analytics company operating in the financial technology space, but our core product actually primarily focuses on central bank communications. So we track every communication coming out of 20 different central banks around the world and actually provide a singular score for each and every one of those communications that represents the sentiment of the central banks.
So who are those communications to?
So every central bank that we track, and most central banks around the world, have become increasingly transparent over recent years. And so they have press releases, meeting minutes, speeches, congressional testimony, and a whole slew of communications that, frankly, anybody who's operating in the markets need to know about but have a hard time keeping track of, especially if you're operating in multiple markets. And so we not only track those communications, but in real time we pull those down, analyze them, and score them, and yield a singular score that is put into a normalized system that can be back-tested over, we have more than 15 years of data on every central bank we track. So it's back-testable, and we can, of course, see how various asset classes perform in relation to that central bank sentiment data.
So central banks were a big story this week with the Fed deciding to raise rates a quarter of a point. What were you seeing leading up to yesterday's announcement?
So the Wednesday announcement was
Wednesday,
not
sorry.
surprising at all to us. Not surprising at all to most, I think, at this point. But what we saw was rising sentiment from the Fed. So we normalize our data around zero, where negative numbers indicate negative sentiment about the state of the economy, positive numbers indicate positive sentiment about the state of the economy. And so we see most of our data is bounded between -2 and +2, serving as two standard deviations from the norm. And what we saw was sentiment had crossed the zero bound much earlier this year, and actually in April it peaked, and it really fell back down for most of the mid-year, and only in recent weeks did it climb back up to the peak it had been at in April, back when people were expecting a rate hike in June. So the fact that there was going to be a rate hike very soon was very clear to us.
What do you anticipate now from your data tracking the Fed now that they've raised rates? Do you have any projections that you're looking at, or you're just sort of going to track them and see what happens?
So I think there's a couple of things. One, we'll have a much clearer picture. In some sense, we have a clearer picture of what's going on in the intermeeting periods than most do, because we track everything that goes on in between meetings. We get a lot of attention on weeks like this when there's an FOMC meeting. But our data is actually most useful when people are paying less attention. And so I guess I'd love to have that question in 2 or 3 weeks. But I think right now where we sit, I think we're probably on the lower end of the Fed's so-called dot plot, expecting that there will be probably 3, perhaps 4 rate increases in 2016.
So you do track a bunch of other central banks besides just the Fed. What are you seeing from other international central banks?
Yeah, so we track 19 other central banks around the world, so we track 20 central banks total. We're seeing a variety of interesting things. We actually spotted, so last week we came out in a column on NASDAQ saying that we were expecting the Canadian dollar, the loonie, to fall. And sure enough, Canadian dollar is taking a tumble this week. And that's all a result of declining sentiment there. And of course, oil prices haven't helped them. And then seeing similar things, rising sentiment in from both the Bank of England and the Swiss National Bank. We expect that both of those currencies are going to rise in the relatively near future. So we've been playing a lot more, looking at how our data performs in the currency markets and the FX markets. But we've also seen a number of interesting applications in both the equity space and, of course, fixed income.
We're on the line with Evan Schnidman. He's the founder and CEO of Prattle. Evan, how did you get interested in this? What made you want to start this company?
Oh, that's a tough question. I am a full-blown recovering academic. Yes, you never quite recover from academia. So No, I started out studying how central banks make decisions and how those decisions affect financial markets, and wound up throwing things at my television one day when people were obsessively focusing in on a single word or phrase in a larger communication to the exclusion of other data, right? And with forward guidance being policy, words are data. And so I saw an opportunity to analyze everything, every word, and basically came up with a methodology to do that. Brought on my now business partner, Bill McMillan, and we were off for the races. We wound up just developing something that we knew didn't really belong in the academic textbook, but belonged in the hands of traders and portfolio managers who need this kind of data to keep up with what's going on in the markets, and kind of ran with it.
Evan has a PhD from Harvard University and is widely published in finance, macroeconomics, and also the political economy. Evan, one thing you said really caught my attention here, and I think it's kind of contrary to what some of the talk you're getting out of the Fed. But you expect 3 to 4 interest rate hikes in 2016? I mean, holy cannoli! What's that going to do to the stock market?
The stock market's an interesting question, right? So, I mean, if you look at what's coming out of the Fed right now, their projection is the median of their so-called dot plot projection is that rates will rise 1 percentage point, or 100 basis points in 2016. The baseline projection there would be for 4 rate hikes of 25 basis points, probably the first one starting in March. I think that's probably a little high. Right now, sentiment just isn't high enough to justify that, so it would really have to break through to be able to do that. I think 3 is actually more likely, but the Fed is projecting 4 rate hikes, and as for the stock market, there's going to be less liquidity, right? But let's keep in mind, rates are still, even after 4 rate hikes, even after another 100 basis points of rate hikes, rates are still historically at extraordinarily low levels.
And so the effect on the dollar, I mean, a lot of these U.S. companies have been hurt by, we're strengthening dollar. Now, I've heard, different opinions here, but the rising interest rates, I mean, isn't that going to attract more dollar-denominated investments? Or, I mean, at least in the interest bearing, what do you think the effects on the dollar are going to be?
Yeah, so the dollar is likely to continue to strengthen as these rate increases come up, especially as we see divergent policy continuing from Europe or even accelerating as the case is right now. The bigger question will be how China's recovery comes through, right? With China now actually holding a reserve currency as of last few weeks, that'll actually play an increasingly large role in the international currency markets. My suspicion is dollar strength is here to stay for a little while, unless, again, China recovers extremely quickly or Europe somehow breaks through this borderline recession. One of those cases could, of course, cause the dollar to flatten out, but my suspicion is it's going to continue to rise for a little while.
Okay. Evan, also, you got a book coming out here with your partner. You want to tell us about that?
Absolutely, yes. It came out about 2 weeks ago. It's called How the Fed Moves Markets. I've spent about the first third of the book explaining the history of central bank communications and how those actually have historically come about and how they affect markets. The second section is all about the U.S. market, the U.S. Federal Reserve, and our methodology for how we analyze that. And then we spend the last third of the book really breaking down a handful of international markets that are relevant to most traders, trying to figure out what's going on there and how data on their central bank communications really matter. So, yeah, you can pick it up on Amazon or wherever else you'd like to.
Do you think they know what they're doing? I mean, do you think that there's really this much strength in the economy that it can withstand? They're going to be doing the right thing by combating inflation. And the other thing that I just wanted to ask you is, they always had their mandates as far as helping the economy and doing things like that. But it seems like Janet Yellen's brought in the markets a little bit more as a part of the mandate for the Fed, and that's really not. They should be thinking about the stock markets. They should be doing what's best for the economy.
Yeah, so it's an interesting question. I mean, I certainly do think they know what they're doing, but knowing what you're doing and doing the right thing aren't always the same thing. Um, and I think there's definitely a bit of a painting themselves into a corner with the most recent rate hike. There was a lot of talk earlier this year of definitely raising rates in 2015, and that kind of date-dependent language is very hard to walk away from. And that's not to say that the initial rate hike of 25 basis points wasn't justified. I think they saw the market as strong enough to justify it, and now is a good time to see how things react. But the truth is, this is they are paying attention to a lot more variables than they have in the past. In part because the labor market is strong, and in part because inflation is relatively low, and so they have other things they need to be paying attention to determine volatility, to determine strength or weakness in the markets.
You just wrapping up here. You are going to be a participant in the Benzinga FinTech Awards. Did you participate in the event last year?
I attended the event last year. We were not we were not up for an award, but no, I'm excited. Definitely, please vote for us.
Do you want to
Yeah,
mention
I
that real quick?
definitely.
You can vote for Evan's company, Prattle, if you go to bzawards.com. It's
Do you
the
want to
site.
explain that
It's
a
the
little
site.
bit,
Yeah,
Spencer?
sure. So Benzinga is for the second year now. We're having the Benzinga FinTech Awards. It is an award show dedicated to the fintech community and kind of recognizing all the achievements in that space and the innovation in that space. It'll be sometime. We don't have an exact date yet. Sometime in April. It'll be in New York City. It's a big event. You can go to get all the information at bzawards.com. You can vote for Evan's company. He applied or submitted his company for an award, so you can vote for them there. And it should be a great event if you're into fintech, which Evan's company is obviously one of those players. So check it out. It's going to be a great event, and Evan will be there along with Prattle, and we look forward to seeing you there, Evan. But thanks for coming on the show. In the meantime, we always appreciate having new guests on, and we will talk to you again.
Excellent. Well, thank you very much for having me, and enjoy the rest of the day.
All right, you too.